How's everybody doing? Can you hear me? Okay, awesome. Welcome. My name's Axelrod. We're going to begin today's lesson in about 2 minutes. Give everyone time to get here. I'm glad that you can make it. Doing great, man, doing great. Just trying to stay safe. I hope everyone else is doing great and doing the same. Yes, Bitcoin to the moon. We got about 4 more classes after today. I take it you're invested in Bitcoin. Are you just speculating? All right. Just by curiosity, where are you guys from? Where is everyone from? I'm just curious. West Coast, Cali, East Coast. Got any internationals? Where are we from? Cali. I see a lot of Cali. ATL, London. Welcome. Whoa. So it's safe to say that you got a large variety of people from different places, and we're finding a common interest. It's amazing. India, Denver, wow. Yeah, it's a really incredible thing. All right, so we're going to be talking about the TTM squeeze. I'm going to give you guys a deeper dive into the TTM squeeze. How many of you have not heard of the TTM or haven't seen it in action as of yet? I'm just curious. Going to be doing this for you and for anyone else in the future. Let's see. Okay. All right. Awesome. Okay, there we go. So in today's lessons, we're going to be talking about how to use the TTM indicator on multiple time frames. We're also going to be discussing how to identify and utilize the momentum histogram bars. We're also going to be talking about the psychology of trading and how to master your emotions. And last but not least, we're going to be talking about executing the trades. Just moving forward, it takes a great psychological skill to acquire when using this tool. It's not something that you just want to think that it works every time, because it does have a high probability, but with that, you also want to incorporate a couple of other things. So let's begin. First of all, I just want to see by a show of hands or text in the chat. No matter your trading preference, the TTM can work in your favor. I'm going to show you different strategies that I use on various time frames to profit in these markets day in and day out. Absolutely, I say that this indicator works about 80% of the time, at least in my history and from showing of others that I've seen that have used this indicator. It works about 80% of the time. So it's not, 100%. Nothing is 100% in trading, but with the right tools and the right mindset and skills developed, you will too profit day in and day out if you choose to use this indicator. So we're gonna do a pretty much a breakdown of a couple of styles that I like to trade and probably some common styles amongst most of you. We're gonna be looking at scalp plays. Let's take a look at a trade that I took with the help of the TTM squeeze. All right, so we got Tesla here. And to the left, I have a picture of the trade that I actually took. I'm going to be showing you guys trades that I actually took using this indicator. Just a snapshot right there for you. Now, before we begin, I just want to make sure that we have a clear understanding of how the TTM actually works. And we're going to begin by starting with the histogram bars. Now, on my chart here, can you guys see my chart? You guys looking at the same thing I'm looking at? Awesome. All right. So let me change this over real quick. Let me see. All right, can you guys see this whiteboard? Everyone see this whiteboard? Awesome. All right, let's go. All righty. So bear with me real quick. I'm gonna draw something out for us. All right. Let me make this. Just bear with me. It won't be long, I promise. Actually erase this. All right. So first of all, we want to talk about the histogram bars. It's very important that you understand what they mean, each color. So the light blue histogram bars mean strong bullish momentum. Now, I'm not sure if you guys have looked into momentum trades, but they're very powerful, and you can acquire a large percentage of returns. So first of all, you want to identify the squeeze, which are these red dots. And then you want to identify what's happening, what's taking place while this ticker is squeezing. So if you begin to see these light blue histogram bars, that you need to pay attention to that. If the market, especially if the market is heading to the upside. So if you start to see these light blue histogram bars, that you need to lock in on that, and that needs to somewhere in your mind, you need to just focus on what's about to happen next. Now, I'm gonna put these down here. Let me see. Next, we have the dark blue histogram bars. Now, the dark blue histogram bars means a pause in bullish momentum. Now, a lot of times you'll see these bars on top of the chart, on top of the middle zeroed out bar. And we're going to get into when you start to see these bars on different levels of this chart as well. But for right now, just for my visual learners, just know that the dark blue histogram bars mean a pause in the bullish momentum. All right. Yes, the buying momentum, the pressure is slowing down. When you start seeing this, that's a great indication that a return back to the mean is about to happen, or at least a cool off, maybe a consolidation period of some sort. All right. Let's see. We have the red histogram bars. Now, anytime that you see red histogram bars pointing below this chart, not always, but like I said, about 80% of the time, that's going to be an indication of bearish momentum, which means that the ticker is probably about to start falling, probably about to start dropping. So I mean, if you're playing your put side, I'm not sure how many, but I'm sure most of us are probably trading options. Even if you're buying shares, I mean, this can be a great indication to let you know that the stock is possibly about to head lower, and that maybe you want to wait for the next level before you could possibly get in on a better price level, right? So, I mean, you can use this in different ways, you know, not just for option traders. The TTM is very versatile, so you can really use this thing to your advantage. And last but not least, I know it looks a little hard to this yellow. But anytime that you see a yellow bar, especially following after the red, that typically means that you are seeing a pause in bearish momentum. So the light blue histogram bars and the dark blue kind of go together, and the red and the yellow go together. So oftentimes you'll see something like this. Just move this over. Everybody see this? And usually this will be, the ticker will, let me see. Usually I'm just going to show you like the price action and get a better color. You know, you're going to have some price action like this. Draw some candlesticks for you guys. you guys are going to see price action moving like so. You know, so here, this is the red histogram bar showing bearish momentum. That's your price action going down. And then the yellow would be a pause in that. So you could see anything from maybe consolidation. Doesn't necessarily mean that it's reversing. That's important to know too. It could be heading to the upside, or you could just get a bunch of chop. I see a lot of times, sometimes you'll get a bunch of chop, especially in the market that we've been having recently. So this is just letting you know that it's taking a break from heading lower, at least. Not to say that it can have a continuation. You'll also see something like this. Erase it. You'll see something like this as well. But this is very important that we understand these histogram bars moving forward. But sometimes you'll see something like this, and then maybe the stock will make a continuation down lower. You know, it's possible. You'll have it make the continuation down and possibly break levels of support. So, all right. Let's see. Yeah, the seller momentum is slowing down. So red bars, I'm just going to read a question out loud. So the red bars are essentially the opposite of the light blue bars. You could kind of look at it like that. Just know that the light blue bars, and let me just show you. Just show everyone. Get my ducks in a row right here. So if you have the light blue bars and they're above this this graph here, this bar, this zeroed out bar, this is like your zero level, 0, 0. This is complete consolidation level. You have these light blue bars above that level, then it shouldn't be out of the norm for you to see increase in price action or price action heading to the upside, bullish momentum. You have your pick, whatever you want to call it, but essentially the ticker is heading higher. If you see the light blue bars above this line, and if you see, like you were mentioning, if you see the red bars below that level, then that means that typically the stock is about to head lower. So this is good. This can also be used to like tell you when you need to get out of your trade. You know, if you see light blue bars, right, above, and then you have the dark blue bars followed after that, that's a good indication that, right, like momentum is slowing down. And I would say you don't want to wait till the third bar. Once you see that first bar start to lose momentum, why are you holding on for more? You should be taking profit. I never seen a man or woman go broke by taking profit. I promise you. Let me just see. Someone says, will you use this with the MACD? Do they kind of work hand in hand or no? You could use this with the MACD. Yes, that's a great question. You could use this with the MACD. I encourage you to try this out with other indicators. I actually coupled this with another indicator, and we'll get to that later in the week with what exact indicators I do use with the TTM squeeze. But yes, you can use this with the MACD. You can use it with the stochastics. You can use this with the different things. But great question. Let me see. So in the opposite case, if you bought puts with the light blue bars, means strong bearish momentum. So if I bought puts and I begin to see light blue bars, would that be a strongest bearish momentum? No, it wouldn't be. If let me just move this out the way. So if you're in puts, and I'm assuming that you took puts based off of the red bars under the zeroed out line, and you begin to see light blue bars, typically you wouldn't see the light blue bars after the red bars. Typically you would see the yellow bars, which would tell you that the bearish momentum is slowing down. And this thing works in a system where you actually begin to start the time when a ticker is possibly about to start breaking key levels, because you'll see a sequence and it'll be from red to yellow, and then from yellow you'll see the light blue bars, and that's the key indication that a reversal possibly happened. Now this doesn't happen, that doesn't mean that every single time, because I've seen where you've seen the red bars and the yellow bars, meaning the pause and bearish momentum, and then I've seen a light blue bar, but it ended up reversing back to the downside. Most of the time, though, when you see the sequence red, then to the yellow, and then to the blue, it's meaning that it's had a reverse of price action. Sometimes it has made a continuation of a bearish momentum, but it's not often. More times than not. Let me just put it like that. All right. So what other questions do we have? What's the difference between green and red dots, middle line? Great question. So the green dot, let me see. The green dots signify that the squeeze has occurred. And there's going to be different strategies incorporated with trading this. But essentially, once you get this green dot, this lets you know that price level has, I'm going to just draw this out for you. Typically, when you see the green dot, that lets you know that price level has exited out of its range, right? So if you see the green dots, then that means that the stock is heading higher if it's already making a bullish move. If you see a green dot, and let's say, so let me show you this. If you see a green dot, a red dot, and then the red histogram bars, and then you see the green dot, which tells you that the squeeze has now activated, then you'll see typically the price will continue lower. So that's just a good way to let you know, like, hey, the ticker has moved away from the range that it was trading in, because that's what the squeeze essentially is. It's just showing you, it's telling you that this ticker is moving in a range, right? And just curious, why is it important to know when a stock is trading in a range, right? Why would that be important to me to know? Yes, exactly. Consolidation, breaking the range. Exactly. Can be a powerhouse move for you. Yes, squeeze release means the green dots, not a pause. So it's very important to make sure that you pay attention to these, because that's going to tell you everything. It can tell you everything about price action. Let me just clear up the screen. All right, I'm gonna leave this up and hold on 1 second. All right. All right, so we're back to, let me see, let me share. All right, can everyone see the Tesla screen again? Awesome. All right. So we talked about what the histogram bars means. I can't stress enough how important it is to lock that information in, guys, because once you begin to, you know, understand what those histogram bars mean, it's going to open up a whole new level to your trading. All right, so here we can see that Tesla is breaking down, and just look at the 15-minute chart with me right here. Can you see my pointer? See this red dot, right? That's letting you know that a squeeze occurred there. And then you have the green dots behind it, which is letting you know that the squeeze occurred. You see how that works? So now that we know what the squeeze means, it means that we need to be focused in. Now our next key is to figure out how much risk do we put on the table for these trades. That's a very serious thing that not enough people understand or take seriously. So a quick question. So green dots with red bar is stronger confirmation that the trend is heading down more. So if you have a squeeze and then you have a release of a squeeze and the histogram bars are red pointing to the downside, typically that does mean that the price is going lower. So here you can see that we have the squeeze, the green dots, and then the red bars heading below that 0 dot level. Remember, it needs to be below the 0 dot level, and that shows you that typically that means that the price will go lower. So that's why I zoned into this trade in particular, because I saw the squeeze and I saw that we were at a key level. And that's important because when you get squeezes and you get price level at important levels, you need to pay attention to that, because when it's releasing out of that range, remember the squeeze is really all that it is price level trading in a tight range. Once you get, just think of a rubber band. Once you stretch it for so long, it pops, right? So once you get a release out of that range, it can be explosive. Do you mainly, so I'm gonna read a question out real quick. Do you mainly trade off of the 15 with this technique? Is it accurate, probable on the 5? So you can use the squeeze on multiple time frames, and I'm gonna go through several time frames with you and various slides, and I'm gonna show you how you guys can take these trades, or at least how I take them, and how I've seen others take them, and how we profit day in and day out in the market. So now that we know what a squeeze is, how it works, let's talk about how you should be taking these trades. I'm going to pause this real quick. Clean up my whiteboard. All right. New share whiteboard. All right. Can you guys see the whiteboard again? Show of hands. Awesome, awesome, awesome. All right. So we've talked about what the squeeze is. Now we need to talk about risk. We need to really take risk we need to put risk into the equation, right? So let's just say, I'm gonna draw a couple figures real quick, bear with me. So here we go. So essentially, we have this price action is consolidating. This is your squeeze taking place. And let me just draw some lines for us real quick. All right. So let's say that we're looking to take puts, right? We're looking at Tesla and we're looking to get in puts. We see the squeeze. So first of all, we've identified the squeeze. That's our first job. Now we need to identify our risk. We know that we want to potentially get in because the histogram bars are telling us that price action is heading lower. So we're like, all right, price action is going lower. I want to be in puts. All right. Just bear with me. All right, so awesome. So we're identifying risk, right? So oftentimes when you get a squeeze, you'll get patterns. You'll get what we like to call triangles. It's just a quick way to identify that, hey, this ticker is consolidating. It's in a range. It's in a squeeze right now, right? And I want to be in puts because the histogram bars are red and it's shooting to the downside, and the squeeze is releasing. Well, first of all, you need to know how much you're willing to put on the table and how much you're willing to essentially lose. Because before you guys even enter a trade, you need to be willing to lose, everything. I'm not saying that you should lose everything, but you shouldn't be putting money on the table that you're not comfortable losing, because you will end up shaking out. You'll end up panicking. You'll end up getting out of the trade earlier than when you should have, when the market wasn't giving you any reason to get out the trade, right? So you really want to first identify what you're willing to lose, right? Now, let's just say that right here is a critical level for us. And price action is, let's just say that price action heads to the upside, right? We're expecting it to go lower, but we're scalping because right now I took a scalp play on Tesla. So I need to be willing to accept the fact that, hey, this may not go in my way. And if you're scalping, oftentimes you're trading with a larger position size. So you want to be, I always have a saying, don't let a scalp play turn into a day trade. Don't let a day trade turn into a swing trade. Meaning, if you initially got into a trade to scalp it a couple of candles, just to get in and get out. You're in you're in a high position. You need to be willing to admit that you were wrong and to cut your losses and to find the next setup, the next A plus setup, right? So this is my risk. This is what I'm willing to risk. Let's just say that this is about 10%. Let's just say I'm willing to risk 10% of my account or my position if this thing does go my way. I need to be willing to cut my losses if it does hit that percentage. If you're not doing a percentage and you're looking at, let's say you're looking at key levels, right? You're playing levels. Julian's been talking with you guys a lot about levels. Kev's been talking to you guys a lot about levels. Let's just say that you're playing off of a key level of resistance, right? And it breaks through that level. You need to be willing to cut your losses. Now, on the flip side, you need to have a good enough risk where, especially when scalping, where let's just say it does go in your way, right? You need to have a take profit in mind. You need to have these predetermined levels already before you get into these trades, guys. Don't get so caught up in FOMO, fear of missing out, and don't get so caught in you being up and not willing to take profit. Like I said, these moves can be explosive, but they can also pull back on you. So always take profit. I've never seen a man go broke by taking profit. So it's very important that we first understand that, and we'll get into the risks that you need to take when you're swinging and day trades and everything. But you always want to have a predetermined take profit and a level of a stop loss, a mental stop loss in mind. It's very important. So now that we have our risk down, we know we have a predetermined plan. Now all we have to do is execute the trade. So let's go back to our Tesla. All right. So who here just trades one ticker, meaning you don't really follow the market. You wake up and you just say, hey, I'm going to trade Apple today, or I'm going to trade Amazon today. I'm going to trade, AMD today. You're not really checking to see what SPY does. Show of hands. Or do we actually follow the market? Right. SPY is going to let you know everything. SPY is going to be your golden compass to the market. It's going to let you know where you need to be positioning yourselves. SPY 24/7. That's awesome. Yeah, you don't have to follow a lot of tickers. I would definitely say get used to trading tickers that you're used to, that you're comfortable trading. When you start becoming profitable, guys, you want to get used to trading these stocks, getting used to their moves, almost as if you know how this stock is breathing. It's a deep thing, and it'll definitely work in your advantage. Can't trade SPY, lose every time. Well, hopefully we can change that. We can change that for you. But it's very important to follow SPY. Just by show of hands, how many people here know what companies are in SPY? You can think of SPY being a conglomerate, a grocery store, right? And it just has so many things. Yeah, it's a basket, top 500. Now, do you guys know how to find those tickers? See, some saying no, some saying Wikipedia. Okay, just let me just show you guys something real quick, and then we'll come back to this. Just bear with me. Trying to show you guys Zax. Zax is a site that I live by, and it doesn't want to let me out of the slide, but I'll pull it up for you. One sec. Just 1 second, guys. Trying to get us back. There we go. All right, so I'm just gonna pull up. Yes, thank you for posting that. And you wanna go to holdings. Just gonna come back to the whiteboard real quick. You wanna go to Zach, and you wanna type in holdings, and tell you what, I'll type in the chat for you. It will save us a lot of time. But you wanna type in holdings, and so you're gonna go to Zach's, you're gonna go to search, you're gonna type in SPY, and then you're gonna look for holdings. So SPY, then holdings, and then it will actually pull up every ticker that's in SPY. So you guys can actually start to just watch different tickers throughout the day and just kind of like see how they're moving and, get accustomed to them. But that's a great tool to use right there. But I just want to the reason I brought that up is because check here to your left with SPY and how it's breaking this level of support that I have marked, right? It's no coincidence that SPY is breaking down past one of my key levels here, and Tesla too is also breaking down very badly, right? There's no coincidence. So it's very important, moving forward that you guys have your levels marked. Kev has an amazing YouTube video on how to find these levels. Please go visit that and go give that a look. You spend some time in that. So once you guys get these levels down, Julian's also been talking about levels. Once you guys get these levels down, it's all up from there. But just by show of hands, can you guys see this consolidation right here in Tesla? So you see that diamond that is forming right there? It's very important that we're identifying these. Look here, which type of pattern would this be considered? By show of hands, anybody know what pattern this would be considered? Bear flag, yes, a bear flag, right? No coincidence that we see a bear flag and then a break lower, right? So when you guys start seeing these patterns, it's very important that you're identifying these patterns, guys, and you're coupling the patterns with the squeeze. When you start to see these things happening before your eyes, guys, you want to pay attention to that. that's when you want to be putting your money to work. Don't be in a hurry to jump at something because you just see it taking off, or it's dumping heavily. You want to see these patterns first. You want to see these consolidations. You want to see a run up, then consolidation, a grace period. You want to see some type of pattern, something going on to tell you, hey, I need to turn my attention to this. That's when these squeezes are going to work the best. That's when you're going to be able to have high probable trades. That's what you guys want to be aiming for, high probable A+ setups. Is Tesla really at 687? Yeah. So this is just a trade that I took. I'm just showing you like actual trades that I took using the squeeze. It's one thing to preach about something. It's another thing to actually be doing what you're preaching. So I just want to show you guys what I've taken from using this indicator. There's no problem. Yes, this was around that time, I do believe. So we had a catalyst behind, we had the squeeze, we had a couple of different things going on, and that's when you guys want to pay attention, because when you have a squeeze and then you have a catalyst behind it, it's gonna really, that ticker is gonna really move out of that range. And there's actually a term for that. It's called a greater than expected move. Now, the guy that actually invented this ticker, Dr. John Carter, he teaches us a lot about the squeeze. But when you start to get these multiple factors with the squeeze, that's when you want to be paying attention, because something big is about to happen. I can't stress that enough, right? So let me see. All right, so we have a bear flag here, then we have a move lower. Like I say, I took this trade at the break of this purple line here. As you can see, look, no coincidence that Tesla broke down below this key level I have, already marked, and continue lower. Accompanied with the squeeze, right? You get a squeeze, you get a key level, you get a move lower. I get the move that I was expecting. No coincidence. So you guys want to start to use this kind of like a muscle. The TTM is, you can use it sort of like a muscle. Just keep working this thing out, keep using it, back test it using on demand, see for yourself what it can do, what it does every single day. I can literally count on one hand how many days I went without playing a ticker that wasn't squeezing. So it's not like it's going to be hard to find these plays, guys. Stocks are squeezing on different time frames every single day. Now, it's important to know that once, let me just pull up the whiteboard one more time. Just a quick question real quick. Where exactly did you take the trade in this case? Which point? I'm going to show you that. I'm going to show you where exactly I took the trade and my psychology behind why I took it and everything. Another question, how to identify direction of a stock and squeeze, because I have seen that squeeze fake out too. Yes, squeeze can fake you out. Like I said before, nothing is 100%, but when you couple it with a catalyst or a key level, a break of a key level, accompanied with the squeeze, that's when you want to pay attention. And definitely depending on which time frame you're looking at, if you're in a 1 minute time frame, you probably shouldn't be trying to get 100% return off of ticker, right? If you're up 10, guys, you know how much you could make just by being up 10% every single day, and you multiply that times throughout the year. Just think about if you If you got something as small as 10%, 5, 10% every single day in and day out, you do that every single day for a year, guys. Just making $100 every single day, just $100 would equate to a little over like 25,000 in a year, right? So that's just $100, right? The squeeze gives us high probable trades, gives us high percentage returns oftentimes, right? But one thing to note that I wanted to mention is, let me just draw this one more time for us. One thing that is important to note is that when you get a release from the squeeze, it typically lasts 8 to 10 bars. So I got rid of the blue ones. I needed those. Okay. So let's just say that price level was, we have the squeeze, we've identified we have the squeeze. Now the squeeze is triggered, and we have the histogram bars are pointing to the upside above the zeroed out level, which means this is telling us bullish momentum, right? That it's going higher. Typically, this will last 8 to 10 bars, right? And that's powerful. So that's why it's so important to capitalize off of identifying the squeeze and seeing if it's at a key level, seeing what's going on with this with this ticker, right? Identifying patterns. I can't stress enough how important it is to identify these patterns, guys. If you can identify these patterns, it's going to change your life. But typically, you're going to get 8 to 10 bars of momentum. Now, that's not all the time. Like someone said earlier, there have been times where, price level will return back to the mean, which means that it will reverse. But more times than not, you'll get those 8 bars. And that could be, in pre-market. Let me just say that could be in pre-market. That could be in, after hours. I've seen where stocks will release from the squeeze in after hours, right? And you're like, oh man, I wish that would have happened during the session. There's no warning when this thing's going to go off. We just know that because it's squeezing, that it is going to release sometime. Our job is to pinpoint or try to pinpoint when it's going to release, especially if you're trading options, because time decay is real and it's very sensitive, right? So with that being said, we have some questions. Length of the bars is given by volume. Do you enter options on the first ring dot? Do you use the Squeeze Pro from John Carter? All right, so the length of the bars is given by volume. The bars are just letting us know that typically the price is leaving the range, right? So let's just say that here. Let me just let me just do something for you guys. Make this go real good for you, right? So oftentimes you'll see something like this. And someone said a really great question about when do I get in? And we're going to talk about that a lot more too. There's different strategies that you can incorporate when entering the squeeze, and we're going to talk about all of them. All of them. But generally, typically, you'll see release from the squeeze, the green dots. And this can be once it's left that range here, or it could be before. Sometimes the squeeze will release and it'll kind of give you a clue like, hey, this thing's about to take off. It's about to rocket. So you could enter. What you could do is, let me just get this. You could enter on the break of this consolidation. That would be a breakout. You're taking a breakout momentum play, right? Kevin has a bunch of guides on breakout momentum plays as well. If you haven't read those, please read these guys first, and then come back to the squeeze, and it'll all make more sense to you, right? You'll start to see what we're saying. You're gonna get these patterns. You're gonna get these consolidations. You're gonna see the squeeze. The squeeze is gonna let you know, hey, you need to pay attention to this. We get the release. The light blue histogram bar is pointing to the upside, which is telling me that we're gonna see bullish momentum, and it's going to leave that consolidation range. Now, it can reverse, but typically you'll get those 8 bars, not all the time. So don't, you can see something like this, right? Just move this. Something like this. It'll release from the range, and it'll end up meeting the key level of resistance, and it'll reject. And then you'll see a reverse, right? Sometimes you will see this. This is very possible. That's why, again, we said take profits. You never seen a man go broke by taking profits. So, you should always be taking profits along the way. Another way that you could play this is if you didn't want to take the break of this consolidation and you saw this level of resistance here and you wanted the stock to really prove itself, you can also do this. You could take the break of this key level of resistance, right? Let it prove itself. Patience pays. I can't say that enough. Patience pays. If this thing is really releasing from the squeeze and you're going to get 8 to 10 bars, right, of strong bullish momentum, wait for the break of this key level. Get in, make this your entry point, right? So now you need to be thinking about what? You need to be thinking about risk. What's my risk? So if you're taking a break, the green is going to be your profit. The red is going to be your stop loss, right? And don't be so uptight on your stop loss. You definitely want to have a great mental stop loss or a hard stop set, but there will be times where you really want to get out of an exact dollar amount, and you want to start thinking about ranges, especially when you're utilizing the squeeze. You really want to look at everything, rounded off rather. So have a range set, and once it drops below that range or your level, then you're out, right? If it breaks above, then you're in profit, and have a level of take profit in mind before you get into the trade. Don't get so caught up on you making money, because then you're going to be like a deer in headlights when this thing, if it does, reverse on you, right? So don't get so caught up in, hey, Axel said that we get 8 to 10 bars. It's a possibility, it's a high probability, but it's not always guaranteed. So always have your take profit in mind, guys. Take profit along the way. If you're only buying one contract, that's fine too. Like I said, small gains like 5, 10%, 20%, 30%, and you add those up every day, it's going to equate to a lot of money. You got to start thinking of the bigger picture. Let's get out of this get rich quick, right? You can literally do this and make like 100, 200, 300, couple $100 a day just using this strategy every single day in and day out, guys. I use this. Other people use this. Compounding, yes. Can you hedge while scalping? Well, I guess you're going to have some quick fingers. You could hedge, but if you're going to be doing that, then I would say you want to be looking to hedge against the market, right? Against SPY. You could do that with puts, SPY puts. You can do that with VIX calls, depending on which direction you're taking, right? If you're bearish, you're buying, VIX puts or whatever, or SPY calls. If you're, bullish, then you're going to be into, you're just going to use the inverse of it. So yes, technically you can hedge, but when you're in these scalps, your objective is to get in profit and get out. You're not looking to swing the play. That's typically when you will start hedging, is when you're swinging your plays. You're not really looking to hedge when you're scalping. Not to say that you can't, but you really want to pay attention to the price action that's going in. I mean, if you're scalping, you're not in for more than a couple of minutes. You're not in for half of the day, half of the session. So you're in and out. Have your predetermined stop loss in mind, have your take profit in mind, your break of a key level or a break of a consolidation, and go from there. Accompany that with the squeeze, and you're looking at profits day in and day out. Is that that simple? Yes. So another question. So if you want to be sure, enter above resistance, and since they run 8 to 10 bars, so maybe take profit at 6 bars or whatever. Don't look at it as so much of okay, I'm going to get 8 bars out of this thing. You just want to take profits along the ways, because 6 bars could be another. Let me just draw this for you. 6 bars could be another resistance level, right? So you don't want to be focused on the bars. You want to be focused on your price levels, your price action, what's going on. Look, we're approaching another key level. It could possibly reverse there. It would be a great time to take profit here, or wait for a break above that level. And let's say that it doesn't close above. Let me just bring these down. So let's just say that it breaks above, then yeah, you can hold on for a little bit longer. But if you start to see a rejection at that level, then take profit. The second that you see that rejection, take profit. Don't be so caught up in trying to get 100% returns. You guys are gonna get them just by repetition, just by doing this day in and day out. It's gonna happen. It's inevitable. But don't be so caught up on trying to get those gains. What you guys want to do right now is you want to focus on trading well. If you trade well, you trade A+ setups day in and day out, you will grow your accounts. This will be second nature to you. Another question. For trades trading at all-time high, if you don't have a resistance level on top, how would you take your profits in that case? I mean, I've always heard the saying, if you don't know when to take your profits, now would be a great time. Right? If you're in, let me just show you guys this real quick, right? And then we're going to move on to Tesla, because we still have some ways to go. Once you're in profit, guys, your stock, your profits are now at risk, right? Once you're let's say you buy a contract at the money, and your profit moves to in the money, you have a greater probability of that trade pulling back. So why not just go ahead and take profits, right? Wanting more is going to get you less. Once you start to see that you're in profit, you know, and you're approaching a key level, take it. If you don't have a key level, like a resistance level, it's at all-time highs. The first sign of resistance, the first sign of pullback would be nice. And if you want to get back in, I mean, wait for a consolidation period. Wait to see what the market's doing. Wait for another consolidation period and then a break, right? Don't be so caught up on trying to hold on for as long as you can, because you could end up holding on, and then that the session closes that day, and then you wake up and the stock is down $20, right, off of some news, off of some catalyst that you had no idea that was about to happen. So always take your profits. You know, that's why we're doing this. Why we're trading, to make profits. It was a great question, though. Great question, but I'm glad you asked it. Another question. I like to take profits when I see price struggling to go up. Just re-enter if you need to. Yes, exactly. Just re-enter. Wait for a break above a pattern and our key level. Wait for a break above a key level after, followed by a pattern. These are strong signs, guys. This is not a coincidence. When you see a pattern, you see consolidation below or above a key level, and then a break above and a break below. Those aren't coincidences, guys. Like, you need to really lock into that, and the TTM squeeze will show you that, and it will definitely help you guys out. All right, back to Tesla though. Had a question earlier about where I actually took the trade, right? So I took the trade at the break of this key level. I believe it was like 7-10-ish level or so. So I have actually on demand pulled up, and we're just gonna like go through, and I'm gonna show you the psychology behind why I did what I did, why I took that trade. All right. So can everyone see my on demand? We have Tesla up here. Question, what time frame do you use to make intraday levels to scalp? Great question. So I'll come in usually pre-market, and I will start making my levels there, and I'll move from there. But Kevin has actually a lot of YouTube videos about how to set these levels, how to go about these levels. I mean, we're all pretty much doing the same thing. No different. Check out that video, and it'll show you how to go in here pre-market and use different levels. Me personally, I use the 1 minute, the 5 minute, and like the 15 or 30 minute. I switch out the 15 and 30 just depending on, maybe I saw a pattern on a 15 that I didn't see on the 30 minute, right? Or I saw a pattern on the 30 minute that I didn't see on the 15 minute. So I'm gonna go with the 30 minute instead of the 15, and I'll switch that out. Or you could, depending on how many screens you're trading on or how many splits you have, I mean, technically you could watch all of them, but I go with the 1 minute, the 5 minute, for the scalps. Now, to find the best pre-market levels for me personally, I use the 1 hour and the 30 minute and the 5 minute. So that's the 1 hour, the 30 minute, or 15 minute, and the 5 minute when I'm actually picking my levels. And then I'll go and I'll refer to the 1 minute and the 5 minute just to see how those levels stacked up on the lower time frames, right? Because the bigger the picture, the bigger the move. You're looking for a bigger picture move, a bigger move, especially with these squeezes. You want to be looking at these bigger time frames, especially when you're day trading. Now, if you're swing trading, that's another thing, and we're going to get to that as well. But for scalping, I'm looking at the 1 hour, the 30 minute, or 15, and the 5 minute. and then I'll look at the 1 minute and see how it stacked up. But I'm just gonna play this real quick. Hopefully it plays for you guys. So here we are at about 11:44 in the morning, almost afternoon, I guess. And we have Tesla sitting at this level of support, right? I'm just going to pause this real quick. Can anyone tell me what pattern this is, right? What is this? Like, what is it forming? What is it forming on the cusp of this support level? All right, I typed in what I generally look at when I'm scalping. Yes, all correct. Descending triangles, bear pennant. Yeah, it's definitely forming a triangle here, pennant of some sort. It's consolidating and it's doing it at this level I have. It's no coincidence. I have this set arrest from I have this level set apart from the others, right? So this is me at this time looking at this. I'm saying, all right, look, market is dumping, right? Market is heading lower. And Tesla has formed a bear flag, and then we get the continuation move down. So it breaks that first level. You could have taken the entry here, actually, but I didn't take my entry there. I saw that it was at this key level here because if you would have taken this trade, you could have possibly played it, take profit here, or wait for a break below. But I was waiting to see if maybe Tesla bounced, right? Because here you can see we have this strong pin bar, right? This almost dragonfly doji. I don't know if any of you guys really study up on candlesticks, but got this pin bar slash dragonfly doji here. So this could have possibly been a strong reversal move back up. So I didn't want to put too much capital at risk at just this level of support. So I wanted to wait for a break below. We have a squeeze. And if it's really going to break out of that squeeze, then it's going to break this level. So I want to wait for the break of this level of support. That's just my way that I was thinking at the time. That's my ideology behind the trade. So I'm going to hit play. And I wait for a break and a hold below a level before I enter. So we have the break below. And genuinely, I like for the price level to gap below the level. So if I'm in puts, I like for the gap below. Sometimes I'll still take it because it's still below that level. And I took it because it was still below that price level. But if you really want more confirmation, you can wait for like a gap. That'll really show you a strong bearish momentum that's about to occur when you get a close below a level and then you get a gap away from the price level. That means that thing is about to potentially drop hard like a rock, like we got here. So, quick play there on Tesla for some scalps. Let me just go back. Just wanted to kind of show you guys how I take those type plays. So I get a lot of questions about them. How do you determine profit target? I'm looking for the next key level of support. Have you guys ever heard of pivot points? Anyone ever traded with pivot points? Heard of pivot points? It's an indicator. So I see some no's, see some yes. I'll talk about pivot points in another topic where I show you guys all the indicators that I use. But essentially, pivot points is just going to basically show you where a stock will potentially bounce or reject a certain level that a stock will bounce or reject, just given based off of previous days price action. So it's like a formula put together, and it's basically giving you its own key levels. And, you know, I use pivot points when I trade on TradingView. I trade TradingView on my phone. I saw a question earlier, do I trade on my phone? Yeah, I trade on my phone. I place my trades on my phone a lot. And I watch a lot of my trades. Like I watch SPY on TradingView, and then I'll have other charts pulled up on my computers. So, but it can be very useful. One question is, while watching price action on 1 minute, where do you see TTM squeeze at? What time frame? Watching price action, do you see? I don't really understand that question about the 1 minute. Where do you see the TTM squeeze at? When I'm looking at the 1 minute, I'm looking to get in and get out. I'm checking to see what the squeeze is doing. Here it's squeezing and it's releasing. The histogram bars are pointing down, which is telling me that we're gonna see a continued move down. Just the break of that purple line was like a $4 or $5 move. That was a $5 move that we caught in 3 minutes, right? Oh, you didn't see the TTM on the 1 minute. Yeah, I don't typically use the 1 minute TTM indicator. I've tested it out and I've seen where it has worked, but you got to remember, the smaller the time frame, the smaller the move. I'm looking for big moves. I'm looking for high probable, high return moves, and you should too. And so the bigger the time frame, the bigger the move. So I don't really focus on the TTM on the 1 minute. I don't really use it on the 5 minute either, but I've seen where it has worked. I usually stick with the 15, 30 minute, 1 hour, 4 hour, the weeklies, and sometimes the monthlies. All right. But that's how I took Tesla. We're going to move to the next one. So if you're a swing trader, like I said, this TTM can accommodate most traders. Here's a trade I took on Boeing. All right. And what do you guys see? First thing that you see on my charts, you can see these red dots here, right? See these red dots? Look what happens after the red dots. Explosive move, right? And check out my time frames, the time frames that I'm viewing. Check out the time frames that I'm viewing while I took this trade. We're looking at the 1 hour and the 4 hour charts, right? Like I said before, when I'm swinging my trades, I like to look at the 1 hour charts, the 4 hour charts, and the weeklies. Yes. Hold on. Okay. So we first identify that the stock is squeezing. Now we need to do what? What comes next after you identify the squeeze, guys? We've identified the squeeze. We know that we want to be in this trade, but we don't quite yet know how to approach being in the trade. We know that we need to be focused on the squeeze. We just don't know which direction we should be, especially if you're playing options. We don't know which direction we should be heading, right? You consider the breakout, wait for the break, get ready for the move, off key levels. Yes, all correct. But what I was looking for was determine risk. Thank you so much. Determining risk. You want to determine your risk. How much are you willing to put on the table? That needs to be your next thing before you even think about taking a trade. Start getting that drilled into you guys' head that You want to minimize, you want to mitigate your risk at all costs. That is how you're going to grow your account exponentially, especially accompanied with the squeeze. So I've identified the squeeze. I see the red dots. Now I want to determine my risk. All right. So let's go back to the whiteboard. All right. So let me get rid of some of this, clean this up a little bit for you guys. Bear with me. All right. So she's going to talk about how you should be playing the swing plays with the squeeze. We've identified the squeeze. Now we need to determine our risk. Now, since we're not scalping, right, what does that mean? Since we're not scalping, what does that mean? We're probably not trading. We're probably not going to use the same amount of capital, right? We're putting on a tad bit more risk because we don't know what could happen. You know, if you're swinging, then you're letting this play ride after hours during pre-market, right? You don't know what's going to happen. So you want to minimize risk. You want to mitigate how much money you're putting at work. That means that your stop loss needs to be greater, right? You can't swing a play and then you talk about I'm down 10%, right? That's nothing. You have to have a bigger stop loss. And you also want to definitely be hedging, and we'll talk about that. But yes, correct. So we identified the squeeze. We see that it's squeezing. Now you want to, and you're planning on swinging the trade. Now you want to just make sure that you're not putting too much capital at work. And depending on your account size, best way that I would go about that is by a percentage. Now, when I first began testing out this squeeze with Kev, I took 1K and I grew that to 30K in 31 days. Now, I did that by utilizing the TTM squeeze and minimizing my risk. I would only risk about 10% of my account every single day. That's $100, right? And what I mean by minimize is if I lost $100 in a day, I stop trading. If I gain $100 in a day, I stop trading. And I wouldn't put more than $100 at risk. Now that is 10% of 1,000, right? Because I started with $1,000. If you have, you're starting with $500, or $5,000 or whatever have you, your risk is going to be different. Everyone's going to have a higher tolerance or a lower tolerance in risk. You don't want to worry about the next person. You want to worry about what's on your plate, right? Saying I love is don't let your food get cold watching someone else eat on their plate, right? Worry about your risk. Worry about your account. Worry about growing your account. Worry about your journey and, trading better. Day in and day out, if you just work on trading better, you'll get there. I promise you. Right? So We've identified the squeeze. Let's go back to BA. Play BA. So we've identified the squeeze. We've identified the risk. So here I took this trade at the bounce off of that 125 level it was. And so I said, okay, I'm going to I'm going to have a certain percentage in mind, which typically when I'm swinging, I have a 45% stop loss, which means that, if it hits negative 45%, I'm okay, with losing that before I even think about exiting the trade. Sometimes I'll let a trade. I won't have a stop loss. I'll just absolutely swing the trade. Now I'm not saying to absolutely do that, but if you're placing a trade, you should be willing to lose whatever you throw at the market because you don't know what could happen next, right? You could have a circuit breakers go out or something, or we hit a limit down, limit up, and you lose everything. You need to be willing to lose everything in that trade before you place it. That's managing your risk. So if you put in what you're not afraid to lose, then the pullbacks won't affect you as great. And you need to be able to withstand those pullbacks when you're swinging. You're not scalping. You shouldn't be putting that much capital at work. I don't want to ever hear anyone saying that they put 50% of their account on a swing, or so on and so forth, and you weren't willing to accept the risk on the table. So we identified the squeeze, we identified the risk. The next thing to do is to identify where the stock is going. So here we have the green dots, you guys can see, and the light blue histogram bars, check this out, guys, it's pointing to the upside above that 0 dot level, right? What does that mean? What does it mean when we have the light blue histogram bars pointing to the upside? Bullish momentum, yes. So where do we want to be in? What do we want to be in, rather, I should say? What type of contracts? If we're trading options, what type of contracts do we want? We want calls, yes. We want to be in calls. And we need to be willing to accept that this stock may have some pullbacks. It may want to come down and fill this pre-market gap, right? Look, there's a gap right there. Oftentimes you'll see stocks come in and fill that gap and then make a continuation up. See it all the time. So we've identified the squeeze, we've identified our risk, we've identified the direction of the momentum, which is to the upside. We have the light blue bars pointing up. Now we want to be in calls. So I took like I said, I took some contracts off the bounce of this key level. I was willing to, my stop loss would have been about, like I said, 45%. And I actually, I held this play overnight. Now, typically I don't hold stocks overnight if I'm looking at the 1 hour, judging off the squeeze, because it's 8 to 10 bars, right? So, I mean, like right here, this is already bar 4. 1, 2, 3, 4, right? We're already in bar 4 in pre-market. So 8 to 10 bars would have been about here. It could have easily reversed, right? So I took a bit of a gamble there. But what I did realize is why I took that trade was because I saw the light blue histogram bars here on the 4-hour chart pointing to the upside, right? Remember that sequence I was telling you guys about? Remember I said it was going to be important to remember that sequence? The squeeze, then you get the light blue bars, then you get the dark blue bars to show you the pause and bullish momentum. And now the next wave, the red histogram bars to the downside. Then what's the next phase after the red histogram bars to the downside? What do we get after we get the red? Typically, not all the time, but typically, what will you get? Yes, you'll get the yellow, right? And then what comes after the yellow? The light blue, right? So I saw that. I saw, okay, when I was taking this trade, I said, okay, we got a squeeze here previously, a couple days prior before We have the squeeze on the 1 hour here, right? We got a squeeze. We got a big push up. We got a cool down, a grace period, some consolidation period here, right? Kind of just ranging. We got almost a touch of this support level right here, right? And we have a sequence of the squeeze going from, going from light blue to dark blue to red to yellow, right? So the next sequence I'm looking for is the light blue and a continuation up higher, possibly to retest this trend line that I've created, right? So these are all the things that you need to be thinking about when you're looking to swing these trades based off of the squeeze. Yes. So that's what I was looking at. That's what I was thinking about when I was swinging BA here. All right. Go to the next one. So if you're looking to day trade, you're a day trader, you're looking to day trade some of these TTM these TTM plays. Show you some things that you need to be looking at. All right, let's take a look at shop. What do we see? First thing you see on my screen, you see the red dots. That lets you know, like, hey, I need to be paying attention to this stock. I need to be seeing what's going on, what's about to happen next. This is when you need to be zoned in, guys. You see these red dots, you need to be zoned in like a deer in the headlights. All right. Check this out too. On the 1 hour, shop is, what is shop doing right now? Anyone tell me what shop is doing on this 1 hour, even the 30-minute chart? What's it doing? Yes, it's ranging, consolidating, squeezing, all correct. Yes, yes, yes. Yes, yes, yes. It's trading in a range, right? So I'm looking to day trade this. I'm saying to myself, hey, it's trading in a range right now. It's squeezing. I'm looking for a break out of that range. Let's look at shop on the 1 minute. What's the first thing that you see? What is it doing right here? What is this? What is this called? What's this? What's it doing? What's this called right here? Triangle, pin it. Yes, 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 yes. Very good. Yes. Check this out. There's no coincidence that we have a squeeze accompanied with this triangle. You guys see that? You're starting to see these patterns that I'm mentioning. If you can lock into these patterns, guys, and lock into these squeezes, it's powerful. Imagine catching this play on the break of that pattern. Right? That was like a $14 move right there for you. That was a couple of $1,000s. That could have been a couple $1,000s for you. Just by playing, just off of one contract. Right? Couple thousand off of one contract, just playing this squeeze play. I made 266 in like 2 minutes, not even 2 minutes, and I sold, right? So you're looking to day trade this. Wait for these patterns to form. Be patient. Patient pays. Write that down. It's important. It's important to jot down your trading journey. It's important to jot down everything that you guys are seeing, what price action you're seeing during these days. Yeah, we'll get to that bull flag. It's very important that you guys train your eyes to identify these patterns. Check this out in the 1 hour. What is this? It's triangle 2, right? You see that? You guys see how this thing goes hand in hand? You could have jumped in prematurely and rode this wave and came out on top. You see that? And we'll get to in other lessons further in the week about strategies I use to profit from the squeeze. Sometimes I'll get in before and I'll I'll show you how to go about that, how to prematurely get into a squeeze and come out on top with the greater than expected move, right? But yeah, here we have the triangle and we have the break and then a continuation higher. So you need to first of all, we identified the squeeze. What comes next, guys? What comes next after you identify the squeeze? I want you guys to drill this in. Yes, you want to manage risks. Determine your risk. So if I'm looking to play this squeeze play, right? There's two ways that I would have went about playing this day trade, right? I would have been looking to trade this on either A, the break of this triangle. So let's pull up this whiteboard real quick. Same thing, just real quick. It's just kind of similar to the shot play, right? We have the squeeze, we got the release, right? We need to manage risk. So if I'm looking to play calls, I want to, first of all, we need to have a predetermined entry and a predetermined take profit in mind before we get into the trade. You guys want to practice this day in and day out. If you practice this day in and day out, guys, it's going to be magnificent. So I want to play, let's say that I want to play the break of that triangle, right? I'm taking a break and a close above out of that triangle, out of that level. Sometimes you'll get a retest of the level. Sometimes the stock just won't rock it, right? Sometimes it just won't fly. Sometimes you'll get a like a gap above out of this level, and then it'll fall back into, or it'll fall back at the range, and it'll reject the range, right? So you could take a entry level at the break out of that range. If you really wanted more confirmation, you could wait for a close of that candle to let you know kind of what it's doing, because it could form an inverse hammer on you, right? And then kind of take a puke, you know? So if you want more conviction, wait for the close of that candle. And then you want to be in calls, right? With a predetermined take profit in mind. My predetermined take profit was, if we're looking to take this break out of the consolidation, would be the next key level of resistance, right? My stop loss would have been possibly a pre-market low if it was somewhere close, or if I'm scalping it, well, we're day trading, but if you're looking to keep a stop loss in mind, think of it as if you were scalping it and have a stop loss down here, right? You're gonna have to be a little bit more lenient with your stop loss, though. We're playing percentages. Typically, on my day trades, I'm taking about 10 to 15% stop loss on my day trades. Meaning, as long as I'm not negative 10% or 15%, I'm good. I've had times where I've had to increase that to 30%, which isn't bad, because 30%, putting 30% of your let's just point this out, putting 30% of my capital at work to potentially make 100% or 50%, right? You can't beat that. As long as you mitigate your risk and you have a take profit in mind, the rest is history. And you do this day in and day out, accompanied with the squeeze, and you're going to absolutely kill these markets. So let me just pull back up. We have a question on the break of 774. Yeah, so you could have also played this another way. We were first talking about taking the break out of the consolidation period. Now, the second way I would have taken this trade would have been, which I actually did, which would have been the break of 774, which would have been here, right? That's another way you could have taken this trade. You could have placed your stop loss below that level, slightly below that level, and your take profit, you could have a percentage of mine, 10%, 15%, 30%. And let's say that the ticker, so let's say that you're in profit, right? You're in profit and you don't know when to take your profit. Have your mental stop loss or set stop loss in mind, the zone here, right? You're taking the break above this level. You're in profit. And it's rallying, and then it comes back, right? It forms a inverted hammer, or got some sellers. You wanna begin to take profit when you start to see that rejection. Don't wait till it's already made its move below your stop loss. Don't go red because you failed to take profit. Take profit off the table. Once you see that first sign of rejection, take profit, because guess what? What can you always redo, guys? You can always do what after you've taken profit? What can you always do? Yes, you can always re-enter, always go back in. Remember that. Don't get so caught up in what could have been, what should have been. Get more wrapped up on taking profit. You're in profit, you get a rejection, take it. Wait to see what it does, You get maybe it'll come back down and retest this level, right? You could wait for a close below that level to take. You'll take a small loss, but at least you still have your stop loss in mind, right? I would just say take profit though. Sometimes you'll have someone they'll want to hold. If you're gonna hold on, you better have that stop loss in mind. Don't let this trade reverse on you. Don't end up like this guy trying to take profit here. You're asking me, hey, when should I cut my losses? Like, no, you should have already had a predetermined stop loss in mind, right? As long as you continue to do that, you trade with the plan, you'll be fine. Like I said, I see this thing work 80% of the time. All right? 80% this thing works that I've seen. So I also want to mention real quick though, it's powerful when you get these patterns and you're looking to day trade. You could look to I have people ask questions like, well, what if I buy multiple contracts? Okay, well, you can use something called the runner strategy, where you'll buy multiple contracts. Let's say I buy two contracts, right? Let's say I buy two contracts at the break of this consolidation period, right? Buying two contracts. I'm going to take one of them off, predetermined already on my take profit here. I'm going to let the other one ride. I'm going to close one contract out, and I'm going to let the other one just sit there. And if we get a continuation, because like someone mentioned earlier, right? I'm going to go back to the chart real quick and show you what I'm talking about. Look, what pattern is forming here above this level? We moved up, we broke above, we're holding above. Now what's forming? What's forming? A flag. Yes. We have a flag forming on the cusp of a very important level. This just happens to be a level that we've been trading in a range for days. Look at this, guys. We've been trading in this range for days. We have a squeeze. We have two patterns that we see here, right? That's no coincidence, guys. You want to pay attention to that. This is when you want to be putting your money to work. When you're seeing these patterns, when you're seeing these break above and below these key level of resistance, not a moment sooner. When you get these things and you combine them, then it can be very powerful. It broke above, but market failed to hold to sustain above this level here. So shop actually pulled back. So I took profit, right? I took profit before shop even reversed. I was in profit and I was happy. I made like 300 and something in like 2 minutes. So, but let's say that market would have continued up higher and you already have shop breaking above this level. See, when you guys are trading, you want to be looking at both of them. You want to be seeing what SPY is doing. SPY is breaking above a level. Is it holding? Shop is breaking above a level. Is it holding, right? This would be a high probable trade though, because you have the squeeze, you have the patterns forming, you have the release from the squeeze shown on the 30-minute chart, which is telling you that the price is leaving the zone, the range. These things go hand in hand. This is a high probable trade. Doesn't mean that it's going to work out in your favor, but it's a higher probability that this stock is going to work in your favor than not. Now, if initially you did enter on the break of that, it did continue to about 780 or so, and then it pulled back. So you still would have been in profit. You still would have made money, but it wouldn't have been the move that you were expecting, which is why you want to have a which is why you want to have a stop loss in mind, guys. You want to have that stop loss in mind so that if that does happen to you, it does reverse, market does reverse on you. You know when to take profit, you know when to cut your losses. As long as you do this more times than not, you will profit. All right? All right, I guarantee it. Let's see. How many stocks do I watch on a single day? I scan through about 90 stocks a night. Just scan through every single night. And I narrow my search down to about 5 to 7 stocks in a day. And out of those 5 or 7 stocks that I'll have like a list for, I'll focus on about 2 of them. I used to focus on like 5, 7 stocks at a time. I had a mentor one time that told me that I was looking at too many tickers. I was doing well, trading well, but apparently my focus, I was having trouble. I was seeing too much. Too much was being thrown at me, right? I wanted to be in this stock. I want to be in this stock. I started moving away from A-plus setups, and I started moving to just trying to make as much money as possible. You want to get out of that. I was getting caught up in that making money fast. And you got to get out of that. You want to have these A-plus setups that are going to be higher probable trades for you, that are going to be way better than you jumping in 5 different stocks, right? Because all it takes is one good setup, right? That could be a 30% runner, 100% runner, 1,000% runner, right? You do this time and time again, and it'll happen for you. So just like I said, use it like a muscle and exercise it. Just keep doing it. Keep doing it day in and day out, and you'll be okay. What's the first thing that catches your attention when you scan? We're actually going to go over how I scan for tickers to trade. not in today's session. It's almost been 2 hours. But we'll go over how I scan for stocks, and I'm going to actually show you guys how to set up your TTM squeeze scanner. So it'll make it much easier for you to find these stocks, right? So what do we talked about? What did we talk about today? We talked about A+ setups. You're talking about time and sales and level 2 pulled up. Do you look at those two? Yeah, I'm actually going to go over a time and sales. I have a time and sales day for you guys, and I'm going to go in depth on time and sales because it's important that you incorporate that into your trading, because essentially that is all that trading is level 2 time and sales. But we're going to talk more about that. Not today, though. Yes, patient pays. So just remember that you want to minimize and mitigate risk, and you want to find A+ setups when using the squeeze indicator. The next thing to do after that is just to execute the trade. Now, sometimes for some people, that's the hardest thing for them to do, is to pull the trigger, is to be the sniper, to take that shot. When you have these A+ setups and you minimize your risk, take the risk. You're not going to make any money. You're not going to further your career in trading if you don't take risk. You have to take risks. As long as you keep your risk management in line and you're trading high probable setups, high probable trades, taking those, you'll be fine. Right? Let's see. So I just want to end tonight with just saying that I appreciate everyone coming out for tonight's lesson. Please, please, please leave feedback in the chat if you enjoyed tonight's session. Let me know what you enjoyed from this lesson today. Just let us know, just give some testimonials, if you will, about what you learned here tonight. We appreciate everything. And if you have any questions, feel free to leave them in the chat. I'm in the chat. I'll be in there answering any other questions that maybe we didn't get to today or tonight. And I'll be able to answer those too. We have a next class session will be Saturday, I do believe. So I appreciate everyone for coming out. My Instagram is CEO Rod Capital. Look me up. I see some questions about different indicators. We're going to cover different indicators that I use, and I see some of the indicators that you guys are pointing out, and I actually do or have used those indicators in the past, and I'm going to break down how to utilize those with the TTM. But like I said, once again, guys, just if you enjoyed today's session, please feel free to leave some feedback in the chat so that I can see how I did and what you guys did catch on to, okay? Until next time.